Almunajem Foods, 75 years of feeding the kingdom, listed in the Saudi market as 40,162. In 2025, revenue held at 3,341 million riyals. Net income fell to 160 million. Margins reset, and a record build year began. This is the complete CFO and business report. Three signals stand out. First, the margin reset came from cost of goods, not demand. Second, capital spending hit a record 132 million riyals, building cold chain ahead of returns. Third, the cash cycle stretched to 88 days. Working capital is the first lever the plan pulls. The plan runs 6 actions on one road: hub and spoke expansion, gated by utilization; fleet modernization with telematics; procurement offtakes with vendor funding; margin and mix architecture; working capital discipline; and green financing, sequenced from 2026 to 2030. Each action has a gate before the next. The SWOT is honest. The strengths: scale and a kingdom-wide cold chain built since 1950. The weak points: thin margins and a stretched cash cycle. The opportunities: food service mix, Vision 2030 food security in Tier 2 cities. The threats: energy costs, import disruption, and food safety where tolerance is zero. Michael Porter's 5 forces drawn on food distribution. Buyer power is high because modern retail negotiates hard. Supplier power is meaningful on global proteins. New entrants face cold chain capital and licensing. Substitutes come from local fresh production. And rivalry runs moderate to high. Service level, not price alone, decides who keeps the shelf. The model is a chain. Source from global producers. Import through kingdom gateways. Hold in temperature-controlled hubs. Then the brand link. Almunajem Foods, trusted since 1950. And distribute on a kingdom-wide reefer fleet. 3 streams pay for it. Retail for volume. Wholesale for scale. Food service for margin. 4 pillars carry the operational plan. The people pillar: raw talent, Saudi national hiring, and incentives tied to delivery. The technology pillar: telematics on every reefer truck with route optimization. The infrastructure pillar: phase-gated cold hubs, released above 75% utilization. And the digital core: one data spine, from order to proof of delivery. Every risk carries a probability, an impact, and a named owner. Execution risk is high and high, owned by the Chief Operating Officer. Cost inflation and working capital sit with the CFO and Treasury. Food safety is low probability, very high impact, and owned at board level. That is deliberate. Governance keeps the plan honest. The board sets risk appetite and watches the register. The Audit and Risk Committee owns controls and CAPEX stage gates. Management delivers a monthly KPI pack, a quarterly board review, and an annual plan refresh. The context is Saudi. Vision 2030 puts food security on the national agenda. Population and tourism lift demand for meals at home and away. Modern trade consolidates. Quick service restaurants expand. The riyal stays pegged at 375, and the cold chain is the moat that separates winners from the rest. The portfolio drawn product by product. Poultry and its direct products. Red meat and seafood from cold waters. Butter, cheese, and cream. French fries for quick service kitchens. Olives and olive oil. Basmati rice and fruit, including avocado pulp. Frozen, chilled, and ambient, all moving through one cold chain. Peer comparison at live market caps. Al-Marai leads the sector at 46 billion. Almunajem Foods stands near 3.8 billion. Now the like-sized contrast. Nadec books nearly the same revenue, with a net margin of 11.2% against 4.8%. That 6-point gap is the plan's headroom. Valuation was every assumption on screen. Risk-free, 4.45. Saudi equity premium, 5.01. Adjusted beta, 0.7. The WACC lands at 7.7%. The plan discounts to 61.9 riyals per share. The market says 63.3. Read the grid, not one number. No buy, sell, or hold verdict, ever. 5 catalysts to watch. Anchor offtake agreements in 2026. Phase 1 hubs above 75% utilization in 2027. Green financing lands. The mix shift shows in gross margin by 2028, and by 2030, EBITDA margin back above 9.5%. One grid, 10 years. Actuals in green, plan in blue. Revenue climbs from 2,577,000,000 to a planned 4,346,000,000 reals. Earnings per share builds toward 5.21, and the dividend rebuilds with it. Labeled illustrative on every panel. 5 years in one picture. Revenue never broke. Margin cycled from 6.5% up to 9.7% and back to 4.8%. The share tells the same story. It listed at 63.4 reals. It trades at 63.3 today. The market is waiting for the margin. 2 pictures explain 2025. The EBITDA bridge shows gross profit taking away 74 million reals, while overheads held, and the cash picture shows 103 days of inventory. 10 days back frees roughly 90 million reals of cash. That is the fastest money in the plan. The transformation map is a road. 2026. The network build starts. 2027. The digital fleet goes live. 2028. The mixchiths de Horeca. 2029, balance sheet discipline. 2030, margin restored. 1 road, 5 gates. 9 numbers hold the budget up. Growth of 5 to 6% a year. Gross margin walking from 15.2 to 17%. Capital spending at 4% of revenue, easing to 2.6. Zakat and tax near 8%, and a payout near 70%. The balanced scorecard makes it accountable. EBITDA margin, 9.5% by 2030, owned by finance. On-time delivery above 95%, owned by distribution. Spoilage under 0.5%, owned by cold chain and quality. Every target has a cadence and a name. The 5-year plan, in numbers, revenue builds from 3,508,000,000 to 4,346,000,000 reals. EBITDA recovers to 9.7%. Earnings per share reaches 5.21. Dividends step up to 3.75. All of it labeled illustrative, not guidance. The master budget allocates 2027, month by month. Ramadan begins on February 8th, so January and February carry the stock build. February takes 10.1% of the year. Eid al-Fitr closes March. Eid al-Adha lifts May. 12 months, weighted the way the kingdom actually eats. 3 final charts close the budget. The Ramadan quarter leads the phasing. Of every 100 halalas of budget, cost of goods takes 84. And EBITDA keeps 8.4. Firm cash compounds to 870 million reals across the plan. The complete Almunajem Foods report is live at cfoinb.com. That is, CFOINB.